Hey, it's Dave Chilton, the Wealthy Barber and former Dragon on Dragon's Den. Welcome to the Wealthy Barber podcast, where we'll be hosting some of the top minds in the world of personal finance. Yes, that's to balance me out. The podcast is about making the subject not just easy to understand, but dare I say, even fun, honest. Whether you're trying to fund your retirement, figure out how to build a down payment, save for your kids' education, manage debts, whatever, we'll be here to help you do it. Before we jump in, a quick but important note: nothing we discuss here should be taken as investment advice. We don't know you and your personal financial situation, so we're not here to tell you where specifically to put your investment dollars. We're here to educate, get you thinking, and we hope entertain. But please do your own research and/or consult with your financial advisor before taking any action. Hey, it's Dave Chilton, the Wealthy Barber, here with the Wealthy Barber podcast, episode 26. I said this last time, but thank you so much to the listeners. We're up to number 2 in the country of all business podcasts. We're behind Diary of a CEO. It's not even Canadian, shouldn't count, but very good podcast. And today the momentum will continue. We have a guest that I'm quite excited about, Steve Saretsky. I'll tell you a little bit about Steve. I have followed him for years. I followed him on Twitter, X now. I followed him on YouTube. He does a great job of doing housing industry analysis. He's a realtor out in Vancouver. He's one of the big players, top 1%. Business school background, excellent communicator. He does the Loonie Hour. I don't know a lot of you have heard of that podcast or watched it or listened to it with Keith and Rich. He tells me off air he carries them, that he's the smart one in the group. They're not that clever, and he has to lift them up and carry them through the podcast. But I really enjoyed it. They did a special episode where they went to Ben Rabidou's cottage and chatted, and it was fantastic. The production values were amazing. The insights were really interesting stuff, and I thought that it was one of the best ones I've seen produced in Canada, period. We've had Ben on the show, and a lot of you loved that episode. Steve, let me start by saying you will not be coming to my cottage.
What?
Okay, I hate company. Even if I invite you, I don't mean it. I don't want you there. Okay, it's nothing personal. I just don't like anybody coming. But no, you've done a great job. You've really brought a lot of good information to Canadians over the years. You're very data-driven. And, you know, a lot of people think of you as being very opinionated, but I always find your opinion is born of the data, that it's very much well backed up by the research you've done. So that's the big intro. There's a lot of pressure on you to live up to that intro. Don't let us down.
That is a tall task to climb there. Yeah, Dave, thanks so much for having me on. You and I were joking off the air before we got on, but I said one of the only books my old man gave me as a kid was The Wealthy Barber, and he insisted that my brother and I both read that, and we did. So
that's good.
I think it's funny to come full circle, and I'm sure my old man will enjoy the podcast here today.
Yeah, I'll give him my best for sure. Listen, I want to start with an interesting perspective. 2, 3, 4, 5 years ago, everywhere I went, everything I turned on, especially YouTube, it's Canadian housing crisis. Prices are going up. There's a housing crisis. Now prices are going down, and everything I hear is Canadian housing crisis. So when they're going up, it's a crisis. When they're going down, it's a crisis. Obviously, it all depends on whose perspective that they're coming at from. What are your thoughts on the general market right now?
Yeah, I mean, again, it's funny. It's right. It's like who is it a crisis for? It's a crisis today for the real estate developers and some of the realtors and mortgage lenders and things of that nature. But I would argue that it's again, falling prices, and we're starting to see falling rates again, is ultimately a boost for young people trying to get into the market and affordability, right? I mean, I think the reality is affordability today is still incredibly stretched, but I think it's interesting to sort of see like the sentiment shifts. I mean, we were talking about it on our podcast a couple of weeks ago, but like on the front cover of Maclean's magazine, I think 2 weeks ago, was like the condo crisis, they called it in Toronto. Yep. And it's like this Jenga tower that's like collapsing and falling over. And I was like, wow, that's such a great sentiment indicator of like where we are today, like where sort of mainstream psychology is, and which is everybody's like running from the condo market, thinks it's going to get worse. And it's a complete sort of 180 from the market we're used to, which is, 40, 50 pairs of shoes at an open house and everyone fighting each other at presentation centers, literally setting up camps and tenting overnight to get their hands on a pre-construction condo.
What's happening in your mind in the condo market for the collapse to be this severe? And I would say relatively quick. A lot of people predicted this. I mean, you were talking a year or 2, 3 ago about why this could easily happen. Ron Butler's been speaking about it as well. But what tipped it over and made this happen so quickly?
I think it was just like the runaway price inflation. Like it was a mania. I mean, there's no other way to put it. Like you look at, I remember in like early days of 2020, like just after the pandemic, like world was shut down, and all of a sudden you started seeing like kind of in the summer of 2020, we started seeing houses going into multiple offers. I was like, man, that's so strange. I was like, what are people doing? Like the global economy is basically shut down. People are losing their jobs, and people are out there like competing and bidding up houses. And I thought that was so strange. And obviously that sort of kick-started I mean, let's call it what it was. I think it was a real estate bubble, at least in many parts of the market. And you had the huge run up in the suburban markets. Like here in Vancouver, if you look at the suburban markets, we call it the Fraser Valley. I mean, from 2015 to sort of the peak of 2022, like prices, like literally, like you look at condo prices from 2015 to what 2022, they literally doubled.
No, it's amazing.
Right. I mean, in 7 years to have home prices
No,
double.
you're averaging 10, 11% a year at that point versus the historical averages of anywhere between 4 and 5 and 4 and 6, depending on the time frame.
Yeah.
It's quite remarkable. And to your point about the mania, when you look at late 21, early 22, in many parts of the country, that was truly nuts. I mean, that was the ultimate blow off top where the experts were saying it's too expensive, yet it got dramatically more expensive. And that's when I started thinking this almost has to fall. There's just not enough income out there to support this. And you can forget the foreign buyers carrying the market. It's gone too far, too fast. And then obviously we've had the trouble set in that we have. You know, it's funny on the affordability front. I think too often we leave out the interest rate differential. So it's still very expensive. It's still too expensive, unfair to the younger generations. But when you compare it, say, to 1995, when interest rates touched 10%, and now you're looking at mortgages in the 4% area, the monthly income dedicated, the percentage of your monthly income dedicated to the housing cost, funnily enough, is not that different. Now, historically, of course, rates haven't averaged 10. They've been closer, let's say, 6.5. But that has to be factored in. The down payment, on the other hand, where interest rates don't affect that, wow, is that tough to put together for young people? Where do you see all this settling down over the next couple of years? Do you think that we're going to see slightly lower rates in the very short term? Although I don't know on the long side whether we will. Where's all this headed in your mind?
Yeah, it's a good question. I mean, just to touch on what you mentioned there with like the down payment, I find that's like actually like the biggest challenge, right? It's not necessarily like carrying the mortgage. Yeah, it's difficult, but like saving after taxes, now the down payment has to be like a couple $100,000, in the GTA in Vancouver, it might be $300,000-$400,000 to save that money after tax without like parental help. It's funny. I had like this, I'll never forget. I had I'm not going to mention a name, but like probably one of the larger Canadian bank economists, and like they're messaging me on social media, and we're chatting, and there's a lot of mutual respect there, and they're like, they were struggling to get into the housing market. Yes. And they said to me, like, we're struggling, not because we can't afford it and we don't have good incomes, but we can't save for the down payment in Toronto because Toronto's so expensive. And yeah, they've got a great job and they're an economist and they know the markets, but that was the biggest challenge. And so, where is this all going? I mean, I think that it's interesting. I think there's a lot of parallels to the 80s and 90s. And obviously I wasn't selling real estate then, but you just go back and you look at the data and you look historically what happened. And I think that, we had a huge run up. It's been runaway home prices for 20 plus years now. And I think that it's highly likely that you just go through this decade of stagnation, like this lost decade. And where I kind of try to push people to like the parallels, which is like, guys, it's already happening. I'm in Vancouver, so if you go onto like the west side single family market, so like think about like Shaughnessy,
right,
Caras, like all like the prime Austin, like the best neighborhoods in Vancouver. Those houses, they peaked in 2016. So you had this.
I did not know that.
Yeah, they had this influx of obviously foreign money that came in, which everybody knew, and then eventually they brought foreign buyer taxes in, several years later. But those markets got pushed up to extremes in 2015, 2016. They peaked in 2016, and if you actually go look at the price chart today or run an analysis on any of those houses, they're still selling below their 2016 levels.
That's very interesting.
And that's 9 years, and that's like prime real estate. It's dirt. And so I'm always like, well, why should your suburban condo just continue to go up every single year when like the best real estate, and you go West Vancouver is the same thing.
No, that's actually very interesting. Jumping topics a little bit, you've done a really good job lately of highlighting the fact that there are a fair number of developers out there with big land packages that they used a lot of leverage to acquire. And this reminds me of the US in 2008. That part of the crisis down there didn't get enough attention. A lot of those developers didn't make it through.
Yeah.
And I think in Canada, when you look at the carrying costs in that land, way higher than the income. In fact, in some cases, there's no income. There's nothing coming from the raw land, that we're going to have the same challenges play out. And if they go back to market on it, they're going to be underwater and they don't necessarily have the balance sheets that can carry it. Are you seeing that in the West? What do you think of that as being a significant issue?
Yeah, I think it's the biggest thing that I'm sort of most watching. I think like again, like the McLean's article will talk about the condos or like, oh, single family houses are dropping. I don't think that's really where the fireworks are. I think the fireworks are really in like the pre-construction, the development space. Obviously the general public is not as in tune with that. You
Right.
really have to have kind of like an ear to the ground, and you kind of have to know who's who and what's happening. But what's happening there is effectively similar to like mom and pop that speculated on the pre-sale and ever rising prices. The developers did the same thing, but they were typically
Absolutely.
doing with development land. And so, development land typically doesn't have like a yield, right? I mean, there's very little yield there. You're basically, what they were doing was like every year, Dave, when land prices are going up, 7 to 10%, they just basically kept refinancing this land and going out and acquiring more land. It was basically just like a land
Exactly.
accumulation game, right? And so long as prices just kept going up, you just kept refinancing and just continued to acquire land. I think what we've seen now is obviously prices are coming down significantly, and not only that, but interest rates have gone up dramatically during that span, where you're just seeing the interest payments now are suffocating these developers, because these developers don't have the ability to actually go and develop that land tomorrow. In many cases, they paid too much for the land. The prices have come down. It's uneconomical to then try to build a pre-construction condo on it. And you can't sell it because the market's illiquid. And in some cases, we're seeing, like in prime Vancouver areas here, in the Broadway plan is what they call it. Land prices are down 35 to 50%.
It's interesting because I think you could see them downtick another 10 to 20 because you're going to have some forced sales. It's almost inevitable when you look at the math behind the scenes here that some of these developers aren't going to be able to hold on. And you made a very important point. They can't just turn and build. Building costs haven't come down much. You still got the tax challenges. And if they factor what they can really get in this environment back in, they're selling at maybe even a bigger loss than they would be if they just let the land be liquidated. So it's interesting. What about the lenders on that front? Who are the primary lenders to that group of developers, and how exposed are they from their balance sheets perspective?
The ones that are really under pressure, typically it's sort of like the private lenders, so to speak, or like tier 2 lenders. So it's not like typically like an RBC or, a TD bank. It'll be like a tier 2, tier 3 kind of lender. So it's more expensive debt typically. And so again, these are sort of typically your smaller to medium-sized developers that I think are really in the crunch. The big guys, some of them own the land for 30 plus years. They're
That's right.
fine. They're just choosing maybe not to develop today, or they'll take sites that are actually profitable still and they'll go and develop those. But the people that are really in trouble are the people that bought land 3, 4, 5, 6, even 7 years ago. And it's just, they don't have the same deep pockets to go out there and develop in this type of market. Those guys, I think it's really just survival mode. And I think a lot of bodies are floating to the surface. I think more will float to the surface in 26. When you chat with commercial lenders today, they're telling you like there's no land sales transacting today.
That's right.
The deal flow that they're getting is basically just like foreclosed land.
That's right. Panic sales, et cetera.
Yeah, it's a fire sale. And so because basically the land effectively gets liquidated by the lender, there is a clearing price, and because the price is so good, there is a buyer on the other side.
Yeah, I agree with all of that. And I think it's going to take a while for all this to play out. And we'll see where the bodies are going to end up being buried. But it's a challenging time. I think it's more challenging than many realize. And the point you made earlier, all of the focus seems to be going on the Toronto condo market, to some extent the Vancouver condo market. But there are bigger issues out there. Now, you're starting to see some PR where you're thinking, hey, are the developers going to start going to the government looking for bailout, looking for tremendous help? I'm not sure the public has a big appetite for that. A lot of these same companies and individuals made huge money over an extended time frame. And I think with times being so tight and the economy already rocking, a lot of the voters are going to say, hey, that's the game. We don't want to be involved in that. But it's also a big employer group. We've already got enough economic problems. How do you think that's all going to play out?
Great question. So I can tell you that pretty much every major developer, again, I can't speak for Toronto, but in Vancouver, every major developer has effectively laid off a percentage of their staff. So nobody is immune to this. What's interesting is you're seeing more of the big developers becoming public about the layoffs and saying, hey, we had to lay off these people and it's so disappointing, because they're obviously trying to basically lobby the government, right? To say, guys, look, things are bad. We're gonna have to lay people off. We've seen recently in the last, month or so, we've had a huge cohort of developers penning letters to government, like BC government, federal government, saying remove the foreign buyer taxes and the foreign buyer bans. We need to get some capital into housing to basically stimulate this sector. And that's going to be really interesting to follow, because for those that are kind of maybe less in tune with it, you have a federal foreign buyer ban that's in place until I think it's January of 27. And so that's like, I'd be interested to see, will the Carney government eventually cave and try to reverse that out or carve out more exceptions? And I think when you look at polling, I think the polling suggests roughly 80%, it's in that ballpark, roughly 80% of people are in support of a foreign buyer tax and ban.
That's right.
So for a government to say, oh, well, we really need the jobs and this sector is really hurting, I don't think that's going to sell politically to remove that. So I don't know what they do from here. I mean, we can speculate. I've got a few opinions of already what is happening, where I would call it sort of a quasi bailout is already actually underway.
In what manner?
So what's happening, it's interesting. The big one, and it's been talked about, I'm sure you're familiar with it, is the blanket appraisals.
Yeah, for sure. We're seeing those in Ontario left and right. In Toronto, that's how it's done.
Yeah, we see them here. So again, for the listeners, it's like effectively, let's just say, Dave, you went out and bought a pre-construction condo in the GTA in 2021. You paid $1,200 a square foot. Now you're going to complete the unit, several years later. And the real market value today, because prices have dropped, is not $1,200 a foot, it's $1,000 a foot.
Right.
And so, the lender goes, well, yeah, but we had an appraisal done, 3 years ago at $1,200 a foot. And, you went through our application process at the time. So we'll still honor and lend you the mortgages on the basis that it's $1,200 a foot. We won't look at the today's value of $1,000 a foot. We'll just use the old appraisal. So there's a bunch of condo developments that will have these blanket appraisals done by the lender. And effectively what they're doing from the bank's perspective is oftentimes that bank, let's just call it the green bank, has financed the construction of that development. Right. So they're like, well, if we have 30% of the building that can't close because the appraisals are way below what they pay,
we lose it elsewhere.
So let's just kind of kick the can down the road. Let's just give these people their mortgages. In some cases, it's 100% loan to value, and we'll deal with the problem, 2, 3, 4, 5 years down the road.
No, I agree. I mean, lend and extend really has become lend and pretend in some ways around the value. But that's why they do it. You're right, because a lot of people are curious as to what's their incentive. But that's the incentive. They've got other loans in many instances. In other parts of the whole process. So yeah, it's very, very interesting stuff. You talked recently about a deal that fell through, I think it was in Vancouver, where the sales were actually quite reasonable. They had a good percentage of the building sold. Yeah. Walk me through why you think a deal like that falls through at that particular point. Is some of it because the builder's worried that the people aren't going to be able to close when it comes time?
Yeah, that particular project was basically like a large project. The developer had a strong sort of foothold in that community. They're very big, well capitalized, probably one of the better developers in the city. And they had pre-sold close to 60% of their units, which is typically the financing requirement to actually move forward. So by many accounts, they probably could have moved forward given sort of how well capitalized that developer is. And yet they decided, you know what? We're just under 60%. Let's just cancel this project. Let's return all the deposits. And for me, that was really just like a good signpost to say, wow, like if this big developer is, having pre-sold close to 60% of the units, is just cutting deposits back. And I should say, because they're big and they want to maintain their reputation, those guys actually let their realtors that had pre-sold in there, they let them all keep their commissions.
That's interesting. So
Which is
good
like, again, think
PR,
about
keep
that,
the
right?
relationship strong.
Yeah, I call it 50% of the building. They usually will front a chunk of the commission up front on signing of that pre-sale contract. Right. They let all those realtors keep their commission. So that was not a cheap out for the developer. They had already excavated the site as well.
Right.
And so I just look at that, and what it ultimately tells us is just like, they're probably worried about how do we sell the other 40% or 45% of the building over the next couple of years before this project completes. How profitable is this project really going to be, even though we've already pre-sold a bunch of them?
Yeah, and again, getting closings on those could be a challenge. Plus, can you imagine the relationships you have with the early buyer if you're suddenly selling the last 40% at a totally different price?
Yeah.
And so all of those can cause challenges too on the PR front. No, it's interesting times. What do you think led to all this? I know that you and Keith and Rich have talked a lot about this on the Loonie Hour. And again, it's a great podcast. And I know Keith has always felt that the huge immigration we took on has played a big role. But I would argue that a lot of this was set in motion before we brought in those millions of people. You could see the trends. I think lower interest rates, close to zero for such a long time, were the primary driver of the inflated values and how far this went. Your feeling?
Yeah, I think so. I think I think the biggest one was probably like monetary policy, right? I mean, you leave interest rates at zero, and you have the Bank of Canada governor telling they're never going to raise rates again. You go out and borrow money, you can feel confident about it. And so, we at one point, right, you can get an insured mortgage at the height of the market for 0.99%.
Like, it seems shocking when you say that now, and it's not even that long ago. It still seems shocking to someone as old as I am to hear something like that. It's wacky. And of course, the real estate market was going to get distorted in terms of the pricing. It had to.
Yeah. And like, think about it, right? Like, you're borrowing at 1% and inflation's running at, call it 3 to 4% easily. And so it's like, they're basically just giving you free money. And when people see you take that and you combine it with when everybody sees home prices going up, Dave, at one point nationally, I think it was in 2021, national home prices, the benchmark, not the average sales price, the benchmark, which smooths out these variations, went up 27%.
Yeah. No, just shocking. As I said to you, that was the blow off top.
Yeah.
Where a lot of people who don't follow the industry as closely as you do, people like me went, this has got to be it. It's got to be going down from here. You could kind of see the momentum was so strong and people were trying to buy anything they could. It was nutty.
This is a real story. I had so many of these inquiries, which is like when people see home prices going up 27% in a single year and interest rates are 0.99% on a mortgage, the calls I was getting was from a lot of times was from concerned parents saying, I'm worried about my kid ever affording a home. I should go out and buy a pre-sale condo and in 3 or 4 years it'll be complete. And I'm like, oh, wow. Okay. Yeah, I guess. I mean, I understand your fears and concerns, but people were genuinely fearful.
Absolutely.
Of getting priced out, or the kids getting priced out of the market. In many cases, some of these phone calls I'd have was the kids would be 6 or 7 years old.
I didn't get any of those, but we had hundreds of calls. And I mean, you could see the fear. I mean, it was legitimate at that point. You could see them thinking they were never going to be able to catch up. Let's get in some way, shape, or form. Parents got involved to the nth degree when it all possible. And again, that fed the problem. Because the more they jumped in, the more they drove the prices up. And it was funny. I got asked so often by people why that boomers aren't selling their houses early. They're selling at a later point in time in retirement than they used to. Well, who's going to sell an asset that is going up 10, 15, 20% a year, tax-free gains? Yeah. What are you going to do with the money? As you say, invest at a 1? These parents weren't stupid. These grandparents weren't stupid. They looked at all this and went, no, we're more prudent to hold on. Now, of course, the worm turned. And again, I think that was relatively obviously going to happen when you saw that craziness of late 21 and 22. I mean, at that point, the math was so offside on the affordability front, there was just not going to be enough capital to come in to sustain prices at those types of levels. I
Totally.
wasn't sure it would fall this quickly, by the way. And, we've really seen a lot of the buyers dry up here in Ontario. It's been interesting watching the last 6 months in Ontario, how stubborn a lot of the sellers have been on their price point. If they
Yeah.
don't have to sell, that's fine. But if they have to sell because they've committed to a move or they're getting moved by their job, etc., it's kind of crazy how much above the market they are. And they're sitting there for months and months and months. And I worry when they do eventually realize they have to come down, the price is going to be significantly lower than it was when they first listed it.
Yeah, it's crazy. Like again, I just love like human psychology and sentiment and sort of like, how people react in markets. And I think it was in 22 and then in a good chunk of 2023, you actually saw new listings, like people bringing their homes to market. You saw those collapse like 20-year lows. People were like, I missed, back in like February of 2022, I could have got $1 million. Now you're telling me it's like 950 and like I'm just going to wait. Like rates are going to come back down. Like the market always rebounds, a year later. Like every correction historically over the last 20 years has been very, very short lived. So
For
like,
sure.
let's just hold off. And so what we saw basically, what kind of kept prices relatively stable, I think for the first 18 months of rates going up, it wasn't this flood of like foreclosures coming to market. What we saw was actually just the market got starved of listings.
Supply, yeah.
And it was only eventually over time where people realized, okay, well, prices haven't really bounced back. Like at some point you got to move on with life. And we've finally started to see the inventory. And now this year, right, in 2025, we've seen in some months, we're seeing 10, 15-year, 20-year highs in new listings. Because I think sellers are finally capitulating and saying, okay, like I gotta get out now. And I think that's what we've seen now is we've seen the prices have really gapped down this year in 2025. We've seen a noticeable drop in prices.
I think the market could stay sticky for quite some time because a lot of the first-time buyers can't move up. The
Yeah.
housing prices have come down so much, they've lost their equity that would form the down payment for their move-up purchase. And that may take years to play out. And so we could have a relatively quiet market, at least on the move-up front.
Yeah, that's an interesting one. Like anecdotally, like again, when we work with our clients and what we're seeing on the ground, like you have a lot of people that are trying to move up, but like, oh, well, yeah, I bought this condo in like 21. And like, once I start paying like the fees and the taxes, like I'm losing money and like they're not okay with that. And
Right.
I'm like, well, again, if you want to move because your family's growing, like you're going to have to take the hit probably on the sell side and you're going to have to go try to make it up on the buy side. Your house has come down, your condos come down. But what we're seeing now is you're seeing a lot of these like conditions, right? Subject to the sale of my home.
And all
Um,
the time.
all the time, right? Nobody's comfortable with the risk. It's a very illiquid market, but you're actually seeing now, like, we're involved in a deal where like you've got 3 properties
Yeah,
all on the chain, right? Like that seller's got
absolutely.
something to buy. And so you've got these 3 subject to sale properties and you're like, well, one of them is holding up the whole chain.
Well, you
And
know
then
what?
it's
Stay
like,
confident because a friend of mine, a realtor, had 4. He had
yeah,
a chain of 4 and it happened. So, I mean, it all played out well for him and for the sellers. But you're right. You're getting all linked to these. And if any one seller in that chain is unrealistic about the price they're trying to sell at,
totally.
it makes it almost impossible to make all of this happen. But just going back to the math we discussed before, you made a very important point that if you're at X and you're trying to move up to say 1.5X, to some extent, you could argue you've benefited from the falling market.
Yep.
Because in absolute terms, the more expensive home has fallen more dramatically. The challenge is yours has fallen enough in many instances that, again, you've wiped out all of your equity or at least a big chunk of it, and you don't have enough of a down payment to
Totally.
take advantage of the fact that the math is somewhat positive. And that's the
Yeah.
part that worries me. I don't think that's getting much attention, by the way, but in real life, and of course, that's where you're dealing in the realty, but you're seeing it all the time.
Yeah, you nailed it. I think that's such a good, like, so spot on is, yeah, they're like, we tell this to our clients, right? It's like, think about like a $1.8 million house right now. It has come down to call it 1.6. So you got 200 grand there, but your $800,000 condos only dropped to 700. So you kind of benefit from that falling
Right.
market, but only if you have like enough equity in the existing property. Obviously if you bought it for 800 and it went to 700, now you've just lost 100,000 of your down payment, right?
Exactly.
So
Have you seen any of these stats saying that the divorce rate is actually declining, tied to housing prices?
oh,
And, I've
really?
talked to some family lawyers and they're saying, Dave, we've never seen so many cases of where people have gone through the horrible negotiations of the separation agreements. That's where people emotions come out and you have a lot of arguing. They get through it. Then they go out to the real world to try to find housing and they go, we got to get back together. Like there's no way to make the
That's
math work.
crazy.
Let's fight through this. And obviously there's some divorces still going through, but I'm not surprised that the stats are starting to say that because everything we're talking about, trying to buy two of these places, even in the declining market, is very, very tricky stuff. I really wish that this hadn't happened on the affordability front. Even rewriting The Wealthy Barber, you'd be amazed at how much harder it is to write that book now that such a high percentage of people's income is swallowed by their housing prices. So when I'm talking about saving 10% and doing these other things, realistically, for a lot of people, middle income people, that becomes very difficult.
Yeah.
And so we talked about the divorce rate. You're also seeing people have fewer and fewer children. That trend was well in place before, but now it's been pushed down even further because of affordability issues that often tie back to housing. Anyway, I'm going on, but I wanted to ask you thoughts on immigration. What did you think we went way too far? I just don't know how anybody can argue that when they look at the basic math.
Yeah, I mean, I think that was like the big challenge. I was just gonna say. I mean, I think like so much of this ultimately, like, it's tough because you're like, well, who to blame? There's a lot of like factors for how we got to where we are. But I mean, I think the two obvious ones are, we left interest rates way too low for too long. I always joke because the housing market, pretty much in most, like at least in Vancouver and Toronto, the housing market peaked literally in February of 2022. The Bank of Canada began raising rates in March of 2022. So they weren't proactive and saying, hey, prices are up 27% this year. Maybe we should look at, slowing things down. So they were late. And then obviously the immigration stuff, when you had population growth growing by 1.2 million a year for several years, it was just fuel on the fire. And people will come in and say, yeah, but these immigrants, they're not buying houses, but they are in the rental market.
Right.
And if your rents are going up, 10, 15% a year, that is ultimately it's an income stream for the landlord. So if I'm going out and buying an investment condo, I'm looking and saying, hey, well, the rent's gone from 2,400 to 2,800. I can pay more.
That's right.
For this condo now. And so that it is all relative. And I think obviously we're seeing all this sort of unwinding at the same time now, which is rates went from 0 to 5% in the span of 18 months. And immigration now has, we're seeing population growth is, I think, the slowest in 30, 40 years in BC and Ontario now.
Yeah, it's a percentage of the base population.
Yeah.
And, some of that's because people are moving from one province to another. But a lot of it, you're right, there's been some changes to immigration policy, et cetera. So many things came together. I mean, even things like you talked about the foreign buyers, Airbnb.
Yeah.
I mean, all of these things over an X year period kind of came through to push the real estate prices up to these wacky levels.
So just to add to that, so now, again, it's kind of like classic cycle. Like it's easier to see now, like you can kind of take a step back. But now that immigration has slowed dramatically, now that rates have gone up and the speculation is pretty much all gone.
Yeah.
You're kind of left with the hangover, and you also have the hangover of new housing supply. So like, people always, and I know the developers like to kind of like, moan and complain about, government regulations. And there's definitely way too many taxes and fees and red tape on new housing. I'll definitely give them that credit. But like, we built a lot of housing in that bull market of 2019, 2020, 21, 22. You've got a record number of housing that's currently under construction in the pipeline and is completing at the exact moment when your resale market is oversupplied. So You've got too much inventory on the resale side, and you've got all this new product that's in the pipeline coming to completion that is ultimately going to, I think, it's going to keep, supply demand levels favoring supply, which is, I think there's going to be excess supply. And so I think that's why I say, like maybe we're in that period for just 10 years of stagnation. It's because you can see the writing on the wall, which is just you look at the data and there's just a lot of new housing that's going to complete. So we built a lot. Now we're not starting any new housing today, and that's going to be a problem 5, 6, 7 years from now.
But, and the listeners often still equate housing with houses, detached homes. And on that front, we haven't been building too much. I mean, and one of the big issues we've had is the supply you're referring to is primarily the condo market, at least in the major centers. And I'm not sure it's matching up to what people really want. Like
True.
rewriting The Wealthy Barber, what an amazing learning experience going back out. And we say, oh, generations are so different. You know what? They really aren't. Like the conversations I was having with people in their 20s and 30s in terms of their desires, their hopes, their dreams weren't a whole lot different than the ones I had 35 years ago putting the initial book together. And most of them still want a detached home. They certainly aren't buying these very small condos when they're thinking of raising a family, getting a spouse, and so on and so forth. So that mismatch of what we're supplying to what we're demanding worries me. And by the way, it worries me with Build Canada too. Because as Build Canada talks more and more about the details of what they're going to be bringing to market, that doesn't sound like what I'm hearing is what people want in their 20s and 30s. What they're really looking for is a detached home that's relatively small, and they can get going that way. That's what they're really looking for, and nobody's come up with an answer to how to make that work mathematically.
Yeah, that's a great point. I mean, I see it all the time with just like our younger clients, and they want to get on the housing ladder, but they're like, well, but like I want to get on the housing ladder, but all I can afford is a 1-bedroom condo, but I can't really like start my life or raise a family in this 1-bedroom condo. So like, what do I do? Do I just rent until I can eventually afford a 3-bedroom townhouse? And so that's a tough decision. I think what we're seeing, like Build Canada, for example, the government's new plan is it's all going to be effectively it's effectively social housing. It's going to be for rent. It's not going to be for people to buy. So I think it's just important to make that clear that when you look at product types, single family housing starts in British Columbia where I am, they're at 30-year lows. We don't build single family
here
houses.
too.
Yeah, I think it's the same in Ontario. So I think where we're going to see sort of the new sort of thing to keep an eye on is where it's going, and where I see there's a demand is this multiplex housing. Governments are trying to really force it through, and we're actually seeing developers and builders out there actually building that product. Is these new, like, take an old single family house and chop it up into like 3 brand new units.
Right.
And yeah, I mean, they're not going to be the greatest layouts, but you're going to squeeze 3 bedrooms on 1,300 square feet and multiply that by 3, and that's kind of like your new product type. It's like the new townhouse.
I agree, but let's take a further look, and nobody knows more about this, I don't think, than you do. Why can't we give the public what they want? So if they're looking for a relatively small lot, relatively small house, but not attached to anything else, not multiplex, we can't give them to them. Why? Because we can't get it down to an affordable enough level and still have the developer make money because of land costs, materials costs, government regulation, taxes. Isn't that the basic problem? That's why it's not happening?
Yeah, that's the challenges, right? I mean, like, your land cost is so high. I mean, again, where I am, it's your land cost is anywhere from, call it, $1.5 million to $2 million just for the dirt. And then
that's
if you want to build
crazy.
if you want to build a single, let's just say I give you the land for free. I mean, to build a new single family house, basic generic finishings, call it, I don't know, 2,500 square feet. Like, it's going to be $1 million minimum.
Yeah, for sure.
It's $1 million. So it's like, it's expensive. And, I think 25% of those costs is just government fees, taxes, permits. That's a fixed cost that governments seem reluctant to let go of, because I think they've also taken advantage of this bull market, which is, hey, these developers are making all this money and people are willing to pay these crazy prices. Let's just keep adding and adding more taxes and fees to the cost of housing because people seem willing to pay it. And it's interesting now to see that all unwind.
Well, you got to be worried about municipalities' finances across the country. I mean, they're losing so many of those development fees that they're going to have to look elsewhere to get it unless they tame their spending, which is unlikely. And I think property taxes, which in some areas have been rising dramatically higher than CPI, are going to continue that problematic journey. So no, it's difficult. Let's try to talk about some positives. So where are areas in the country where real estate is continuing to be relatively strong, but is not so expensive as to be out of the reach of everybody? Are there any pockets along that line?
Calgary, Edmonton, 2 major metros, very affordable housing. Saskatchewan, obviously.
I love it there.
Yeah. Did you?
No, I love, I speak there all the time. I love,
Okay.
the whole country I love, but I love Saskatchewan. I think it's a very underrated province. People are marvelous out there, and some of the cities are very nice. And Calgary and Edmonton are great places too.
Yeah.
I mean, they must have risen a little bit over the last X number of years with all of the migration from other provinces.
Yeah, so Calgary had like a pretty good and Edmonton's playing catch up a little bit now. They always tend to lag, but like Calgary had a pretty big run up in prices. I think they're still relatively affordable compared to the rest of the country. Now, I think where I think it gets interesting is like, and these are the markets that are always like you have to kind of differentiate. A market like Calgary, the amount of construction that is happening right now is now you're seeing prices coming down. Rents are down 10%, and they're going to
Absolutely.
keep dropping. You have a record number of rental housing under construction in Calgary by a long shot. Because what happens is like when you get this bull market, it's just the private sector just moves.
They
So
do.
like
And
these
then the CMHC gave them a tailwind as well.
yeah, yeah. That CMHC rental program helped the developers significantly. But basically, the private sector can move really quickly. They're like, to get a permit there is way easier than Vancouver, Toronto. You have tons of land. You can kind of sprawl out. And so when you get these like hot markets and prices start going up, these developers just move so quickly, and they always end up oversupplying the market. And I think that's what we're seeing now. Is you're seeing that you will see an oversupplied market in Calgary. You're going to see it in Edmonton. And so I think that's going to help bring the rents and prices sort of back down a bit to keep affordability in check. The problem with like Vancouver and Toronto is like when the market's going up and up and up, it's the developers can't move quick enough because they're sitting there waiting several years for the permits.
No, it's so true. I mean, it's so true. Even that being said, there are a lot of rental units coming aboard everywhere right now
Yeah.
because of the CMHC program. So you've got to think rent's going to be under some pressure, which is good for the consumer, obviously, and will give them a bit of a break because they've gone on a very tough ride. Now, speaking of which, especially in BC and Ontario, I know more about those two provinces on this front. It's tough being a landlord now. We've talked, yes, some landlords behave very poorly and do some things they shouldn't do. But at the end of the day, the tenant is in a really good spot right now with the tenant review boards on the leverage front. I mean, so many stories about people just saying, well, I'm not going to pay. And by the time that you go to the board and some action is taken, they've been able to stay there for X number of months for free. We're seeing a ton of that. Are you seeing that a lot of BC? And does that worry you as a landlord?
Yeah, it's definitely worse in Ontario. BC's tenancy laws are challenging, to say the least. I think they've just skewed so far in one direction to sort of favor the tenant that you don't really have this like equilibrium. Which is to say, like it's interesting. Like one of the biggest reasons where we've seen like all the investors sort of leave or like adding to supply to bring prices sort of back down is a lot of these investors in BC, they had an investment condo and they had it typically on a floating variable mortgage, right?
Right.
So your variable mortgage went from $2,000 a month to all of a sudden rates went way up and your variable mortgage went from $2,000 to $3,000. But you're only allowed to raise your rent 2%.
That's right.
So you've got a tenant in there, like your condo used to be cash flow positive $100 a month, covered all your expenses. And all of a sudden your mortgage went up $1,000. Now you're cash flow negative $900 and you can't raise the rent. So like, what do? You just bleed out $900 a month?
Yeah, that's a lot of money.
For several years, or you basically become a forced seller. And I think we saw a lot of that where people are like, what do I do? So I think it's always interesting to sort of see like in markets like Alberta, because there's always so much rental supply because the market just kind of keeps building it, is like as a landlord in Alberta, you almost like want to do everything you can to keep the tenant happy and keep them in place. You don't want to lose a good tenant.
Whereas I think that's true everywhere.
Yeah, but like I feel like in BC, it's like it's almost the reverse. Where it's like you're trying to get rid of them because they're under market, and they're under market, and you can't get rid of them. So you're just like like you got a service request for like a leaking dishwasher. Yeah, I'm gonna take my sweet time fixing that, right? Like that's sort of the mentality that is out there.
I'm curious, are you a landlord?
And I actually am in Alberta.
You're in Alberta. And do you enjoy being a landlord? You're doing it from afar, obviously. You have a property management firm out there, I assume?
Yeah, we do with like lease ups. And then, so like I got into that market sort of like early days in like 2019. I was actually more so from like, I'm not a huge like condo believer, like on the investment side. Like I like to like have sort of like land that you can control. And so just slowly started buying in Calgary, and we did some small developments there. Actually working on another one right now. But I do worry about that market because I think there's a lot of rental supply. And I think what we're seeing is rents again, they're down 10%. And I think they're gonna keep coming down.
Yeah, I do too. I mean, you look at the supply demand curve, as you said, the population growth has stalled out. Simultaneously, we're seeing all of these units come onto play, and that's a good thing in a lot of ways. Not so good for you, you're a landlord, but to
Totally.
see rents coming down, it's a positive, I think, for society. That money can go into other things, and
Yeah.
so many people are so tight. So
Dave,
that that's
what's interesting though, just to like pull on that thread a little bit, is the reason why Calgary is also like is in my opinion oversupplied, or is teetering towards oversupply and will be oversupplied over the next 12 to 18 months, is ironically from the Toronto investors. The bubble basically went up so much in Toronto that the numbers stopped working, and they started
that's
to
it.
look for an
That's a
alternative.
great observation because you're 100% right. Look at how much of the Toronto money went out to Alberta, 5, 6, 7. I mean, you're an example.
Yeah.
You're a BC guy, and you went and started investing there. So that's
I
a
was
great
out in
point.
2019, but I remember in 2019, this comes back to a sentiment perspective. Everybody in Vancouver looked at me like I was this crazy guy, like, "Whoa, what are you doing there? Like, nobody makes any money there. The prices haven't moved in 10 years. It's dead money. You're an idiot." And then, in 22, 23, everyone's like, where did you buy? Who was your realtor over there? Can you connect me with them? And then that's kind of when the red flags go off. Like, oh man, maybe this is a time for me to exit. But the Toronto thing is interesting because all the pre-construction agents that were like pre-selling the Toronto condos, all of a sudden they started pre-selling Calgary condos. So they were living in Toronto, pre-selling Calgary condos to all their Toronto investors. And like, if you're going to be a landlord in Calgary or Edmonton, I'm going to be honest, you do not want to own condos. Like it's just dead money, and it always
Right.
has been dead money. But I think the Toronto guys, they didn't know any better. They were just sort of hyped up, and ultimately now that is going to lead to an oversupply of condos and rentals, and a lot of it is Toronto money that I think that doesn't know what they got into.
Wouldn't your real estate industry do us all a favor, yourselves included, if you guys broke apart the condos, the detached homes and all, and didn't group the data together the way you do? Like when we see
Yeah.
the national data, it's all grouped. I like it better broken out.
Yeah, yeah, you can like break it out. I think the problem is like the media doesn't necessarily break it out, where like you have to kind of go into the weeds to
Right.
really figure out I mean, I like going into the weeds because like
Yeah, you're a data guy for
I'm a,
sure. You're a nerdy guy on that stuff.
yeah, too much.
You know, you were talking about Calgary being carried a little bit by Toronto money. Just my friends alone are carrying the Victoria market. I've had
Okay.
so many friends move out to Victoria in
Yeah.
retirement. They like them out or climate in a couple cases. Coincidentally, they've had family out there, but they just love the area. Has it stayed stronger on a relative basis than some of the other BC areas in the last 5 years?
Yeah, I haven't followed it like too closely, but like I mean, I know the market like fairly well, but like the pricing has come down for sure. I don't know the exact sort of percentage terms, but it typically follows like Vancouver on a lag, right? Because what you
Right.
typically see is it's some wealthy boomer in Vancouver that sells their house for $2 million in Vancouver and then goes and buys the equivalent house in Victoria for $1.5 million,
Yeah,
right? It's
pockets the
like
difference. And
the money just kind of like sloshes around the province. And like that's kind of what we saw too, is like during the pandemic, especially, is like you sold your 2-bedroom condo for $1 million, and then you took that $1 million and all the equity that you had built up in that, and then people went out to Kelowna and bought a house for 1.3 million, right? And then
right.
they started pushing up. So like all the money sort of originates, I think, in Vancouver, and it just sort of, as Vancouver goes up, it just sort of spills out to these other like peripheral cities.
Now, do you follow the cottage market closely? In parts of Ontario, it's really run into some difficult times. I don't make a lot of predictions, but I did make one back in April of 2020, doing an interview when COVID first started, and said I thought cottages were going to go flying. And a month later, I came out and did another interview and said I didn't see them flying to this extent. Even early in COVID, you could see some people listing cottages at crazy levels and getting the money, and their neighbor going, well, that's tempting. And the prices made no sense whatsoever. And of course, cottages are great because there's no real way to do comparables. They're all just enough different that you can throw at almost any number you want and see what sticks. As you pointed out, interest rates were essentially at zero. So funding it for people who had a lot of equity in their home, they got the down payment from it. The carrying costs weren't too bad at those rates and things went ballistic. Well, now all of a sudden, has it ever shifted, at least in Ontario? A lot of those crazy cottages have come down 30, 40, and 50%. And who knows where the bottom is because many of them aren't moving.
Yeah, I've seen a lot of those circulating on like Twitter where people post these like large losses in cottage country there. Yeah, we don't have like the same per se like in Vancouver. I think like we don't have like a great like we don't have a cottage country in sort of greater Vancouver. So like
Right.
we don't but we definitely saw like what we saw in Vancouver was like a lot of like the islands, like the Gulf Islands and stuff went up quite a bit. Yeah, I think it was just like the big drivers. I think the biggest drivers during the pandemic, to sort of summarize it, is like the biggest drivers during the pandemic are now the biggest losers, right?
Interesting. Yeah.
And
Makes
so
sense.
like that was the suburban condo that was 45 minutes to an hour outside the city. It was the remote property on the islands. Like, yeah, those ones are now seeing the biggest declines. The detached houses in Chilliwack, BC, that are, an hour and a half outside, like the number of foreclosures and just, ultimately chase the market to such extremes that it's just reversing and snapping back a lot more dramatic.
No, I agree with all of that. Okay, let's wrap up again, going with something positive. You are now the housing czar of Canada, and you are able to put in policies over the next several years that you think can get us on a path that leads to more affordability, more consistency, et cetera, deals with some of the challenges we have. What changes do we need to make? What would you like to see done at the federal and provincial levels?
I would say that I think one of the most successful programs, and I know there's going to be some issues that come out of it. I think the CMHC MLI Select program has been a huge boom for rental housing.
For sure.
I think it's been successful. If you look at like the number of rental units under construction, it's been beneficial. Now, again, there's going to be some snapback as a result, but I think that's been a good program. I think you got to leave that in. I think you can make some tweaks around the edges to sort of protect the taxpayer and the CMHC, and to remove some of the bad actors. I think bringing in, I know Carney had promised it in his election. He hasn't announced it yet. He hasn't brought it in yet. I'm wondering why it's taking so long. But the MERB, it's basically like a tax incentive.
We used to have it.
Yeah, tax incentive. We had it back in the 70s for rental housing. I think on the development side, on the resale side, to spur like new housing, I think that you got to get municipalities and provinces really on board with like, I think ultimately it's going towards multiplex. So building more ground-oriented, family-sized housing. Like ground-oriented wood frame housing is a heck of a lot cheaper to build than high-rise concrete. So if you can build more family-sized housing, which is what we need, I think that would be beneficial. But you get rid of some of the red tape. You got to get development charges and taxes cannot be 25 to 30% of the cost of a new home. Somehow, some way, cities and provinces need to shift their budgets and how they generate revenue. I don't know how they do that. I think what I'd like to see, and maybe a little bit controversial to your older audience, is like seeing these property tax deferrals. I think it's totally ridiculous, to have someone that's sitting on $2 million of equity free and clear, and then to allow them to defer their property taxes so they can age into their single family home at 65, 70 years old, I think is crazy. I think that, that housing should ultimately be freed up for some young person that's earning a high income to come into that neighborhood to get some turnover.
Interesting.
And that might be controversial, but giving them subsidized interest rates to defer property taxes, I think, is totally backwards.
That's interesting. That's my market. Like, I'm old. So you're talking about me. We're going to edit that out. We're going to take that advice right out. You go back, though, to something we've spoken about throughout this conversation. The price of land is a big part of all of this. It's so tough to solve a lot of these problems with the land prices where they are. If you sit down with a developer, many of them are very nice, very caring people. In fact, I have a couple of friends high up in that industry. They are really desirous to help on all of those fronts. They can't make the math work.
Yep.
And it's not greed. If they sit you down and show you the basic math of the land cost, the building costs, and everything else, it's very difficult. What do we do about the land costs? I mean, it's tough to force them down. How does that work? And we've got to have more land come into supply, I suppose. So the federal government's going to have to incentivize the municipalities. How does all that play out in a positive way?
I think that's the reality, and that's the tricky part where it's like, people talk about housing affordability and like it's almost like an urban myth, right? It's like I don't know if you can actually truly achieve it at the scale that people want it or that we need it to be as a country, which is to say that land costs, it's hard to get them down because it's like it's just so entrenched, right? I mean, every bank has lent credit based on the value of the land. Does the bank willingly going to say, hey, you know what, it's okay if land prices across the board drop 20-25%? I think they do everything they can to try to maintain those values. And we see those today, right? Blanket appraisals. Let's try to support the market. Oh, by the way, your negative amortization and you want to defer your interest. No worries.
No problem.
We'll work with you. We'll figure it out. Like, no, that should be a non-performing loan that should ultimately end up in some sort of foreclosure, and it should reset the price of that home. But like we see, so I just think it's so entrenched, these valuations, that unfortunately, I have a tough time seeing land prices come down in a meaningful way, and that's going to be the real challenge. And that's why I say you ultimately are going to see people that might not like it. But I think you have to go to multiplex route because I think land values, you're not going to get the market down to a place where single family homes become affordable again.
No, I think you're bang on. I think everything you said there makes a lot of sense. There are some entrenched interests that don't want land values to fall, and understandably so when you've lent against it, et cetera. You've got scarcity issues, and it's hard to believe in a country of our size, but you do. Well, listen, it's been really depressing speaking with you. I've never been so down. Yes, I'm not sure I could ever have you back on the show, but I've enjoyed this opportunity. Give your dad my best. And I meant what I said earlier. I think you do a wonderful job of bringing a lot of the real estate insights and data to the public. You were really ahead of the curve in some ways when you first started doing all of this through YouTube and through other channels. There weren't many others out there that were making it public to the extent you have. Joe Flynn and a few others are doing a very good job now. There's a number of you who are adding a lot of value and a lot of good educational content. I enjoy the Loonie Hour, and I push all of our listeners to give it a shot. The guys have a lot of charisma. The chemistry back and forth is strong. They cover off a wide variety of subjects. It's not all real estate. In fact, there's been several episodes where real estate's hardly been mentioned. It's more macroeconomics and a feel for the Canadian economy, talking about the tariffs, the job situation, et cetera, and coming at it from different perspectives. The three guys all have different angles on things. So that's a very worthwhile listen as well. Yeah, thanks for finding the time, Steve. It was really good seeing you. When I'm out in Vancouver, I will give you a call. If I'm in too good a mood, I'll get together with you and pull myself down.
Yeah. Yeah, Dave, thanks so much for having me on. It's been a total pleasure. Keep up the good work on your end. Like I said, lifelong fan here. So it's an honor to be on the podcast.
Thanks, my friend. I'll talk to you soon.